I'm here now with Nasdaq CEO Adena Friedman. Adena, thanks for having us here.
Thank you so much for being here. It's been a great morning.
So it is a big morning for IPOs. I think Zoom turned out bigger than a lot of people expected, clearly up 75% right now. What did the process look like from where you sit?
Well, I think that the process, well, first of all, it really comes down to the company. And Zoom, as an enterprise software business, has done extremely well to demonstrate that they can grow, they have resiliency, they obviously have a lot of loyalty among their clients. Their solution is quite sticky once it's integrated into your offices and integrated into your workflows. It's very sticky business. So I think they were obviously able to demonstrate that on the road, and they've done a great job of bringing in a lot of investors.
I got to ask about process again, because you had Lyft about 3 weeks ago. The Nasdaq's job is to make sure things open smoothly. It did that, but then the price has just tanked. Price discovery-wise, it's been the talk of a number of companies that are looking to go public. What happened there?
Well, first of all, we're very proud to have Lyft as part of our list of companies, and they are a great business in and of themselves. I think that they have a long-term vision, and I think it's very important that investors evaluate these companies over the long term and their ability to execute on what they do discuss while they're on the road. It's very early days for Lyft, and they have a long road, no pun intended, to go down to make sure that they're executing on what their plans are. But they have big plans, and I think that they've done a great job of execution across their business so far. So I believe it's really important to look at them over the long term and not just over the last couple of weeks.
Has there been any change in the way that you communicate, or that companies looking to IPO have communicated with you based on how that price discovery process has gone on with a company like that? What are you telling them? What are they asking you?
Yeah, well, first of all, I do believe that most companies understand that every IPO is its own story. And so they look at their own business model, they look at their own access to investors and capital, the conversations they've had with investors and their advisors, and they do recognize that their story is going to be its own making. So they have to demonstrate that they have a long-term view, they have a long-term plan. And so I don't believe the conversations with the clients have not changed on the basis on one IPO. They really are looking at this over the long term, just to know that there's a healthy market and healthy demand overall for companies going public right now.
How healthy is the IPO market right now, and do you expect the conversation about that health to shift based on what's happened here today?
I think that, well, first of all, it's been healthy for a while. So we had 182 IPOs last year. We've had 50 so far this year. So it is a healthy marketplace. I think that there's a lot of pent-up demand still in terms of companies wanting to come out this year. So I would say that it's been pretty steady. We had that one time during the fourth quarter that people got a little bit nervous about how things were going to look going into 19, and then it just recovered. And so it's been a very strong environment for IPOs right now. And obviously today is a great day for I think the markets in general, but I think it's also reflective again of the story of Zoom and the strength of their business.
Some years ago, not too long ago, there was talk about regulation bogging down the IPO market, that companies weren't going to want to go public. What happened to that?
Well, I actually still think that there are some real impediments to companies wanting to tap the public markets earlier in their life cycle. So the companies we're seeing coming out right now are multi-billion-dollar companies who waited many, many years to go public. And what we'd love to see is companies wanting to tap the public markets earlier in their life cycle to give more of the average investors out there access to their growth as they're younger companies, and not waiting necessarily until they become these great $10 billion companies to go tap the public markets. So we continue to see impediments for companies wanting to tap the markets earlier in their life cycle.
After a day like this, how is your call volume going to change to exactly that point? Sizes of companies, interest in going public?
Yeah, actually, we are seeing more and more, particularly in the enterprise software space and the cloud space. There are a lot of great companies out there that are in, I would say, the $1 to $2 billion range, that are recognizing that the market is wide open for them. If they can demonstrate consistent growth, they can show the resiliency of their business model in terms of the stickiness to their clients, and then they actually show the scalability like Zoom has done to get to that, have a path to profitability, I think that they will find that their market's very receptive right now.
Yeah, Zoom was $1 to $2 billion a few months ago. Probably some of those companies have a photo of Eric Yuan on their mirror right now.
Well, the ability for them to grow just an enormous amount over a short period of time and then get to profitability and really show the scalability, that's really what's distinguished them.